Hello traders, welcome to some Brain FX. In today's video, we are going to be doing a recap of the trade we took on Volatility 75 index. If you're yet to subscribe to our channel, please do well to like and subscribe to continue receiving updates from us. And also ensure you watch this video to the end as I walk you through on how we took this trade on Volatility 75 index. Alright, looking at the chart before us, first of all, we look at the movement of the market structure, what price has been doing. So if we take our tools, this is a 4 hours time frame, so we have a break of structure to the upside. There was a retracement, break of structure, retracement, break of structure, retracement. This is another break of structure, retracement, break of structure, retracement. Now here there was a break of structure. We saw that price was going in an uptrend, but here if price fails to make a higher low before creating another higher high. Okay, so instead of price creating a higher low and then another higher high, it failed. Rather, it created a lower low. Okay, so price broke structure to the downside, and then we had another retracement. Price broke another structure. So here we have a change of character. So the trend of the market has moved from bullish to bearish. So there was a change of character. So price broke structure here to the downside, and then here we see that there was another retracement here, and then we had another break of structure to the downside here, and after this there was another break of structure to the upside, which is this, and then after this break of structure to the upside, so we're expecting price to tap into the zone to come here. Now looking at the movement of the price, we see that after this massive break of structure to the downside here, after this break of structure to the downside, we have a zone. This zone caused the break of structure. This is the supply zone. This is the supply zone that caused the break of structure, okay, to the downside. So we are expecting price in the future to come in to tap into the zone. After tapping into the zone, and then we look at selling. Okay, but before that, why is waiting for that? Before that, so we saw that getting to this place, why waiting for price to come here in the future before we sell? Okay, we saw that there was a break of structure here. Let me take this out. We saw that price, there was a break of structure here to the upside caused by this zone. So this zone triggered this break of structure to the upside, and then what else did we see? We saw that there was an imbalance. So this is the other block that caused that break of structure, the last down candle. So our other block is the last down candle that was formed before the impulsive move that broke structure. Alright, so here is our break of structure. Break of structure. Okay. So after a break of structure, we saw that there was an imbalance. Okay, so this is our other block, and then there's an imbalance here. So between this other block, this second candle and this third candle, we see that there is a void there. So that void, we have this void there. Now whenever you see this void, it's called fair value gap, or fair value gap or imbalance. Okay, so a fair value gap, we tend to drop price down to it. Okay, so whenever we see this fair value gap, it is expected that in the future price is going to come in and fill that void, okay, before it goes out. So a fair value gap often acts as liquidity, where price is going to pull back to before it goes its direction. Okay, so we saw there was a break of structure, the supply zone, where we have another block that caused the break of structure, and then demand zone rather. There was break of structure, a demand zone that caused the break of structure. We will have another block, okay, and the next thing we saw that there was fair value gap, FVG. Okay, so now we're expecting price to come in to tap into this hour zone before it goes up. Remember, this is the zone we are targeting. we are targeting this zone, okay, in the future. We're targeting this zone, we're targeting price coming to this zone and then selling off, okay. But whilst waiting for that, we are taking advantage of this buy. So having seen the break of structure and then the demand zone, so we waited for price to come in to tap into our zone. So remember, this is the 4 hours time frame, okay. This is the 4 hours time frame. So the next thing we are going to do, we are going to refine our zone, okay. So let's go down to a 2 hours time frame and just see how we can refine our zone further. So coming down to our 2 hours time frame, so we still have that zone, so there was nothing more to refine, okay. So let's drop down to our 1 hour time frame. Yes, so coming down to our 1 hour time frame, so we still have that zone, that same zone. As a matter of fact, so we have that same zone, there was nothing more to refine. So what's the next thing we do? So having seen our break of structure and then our fair value gap, so we waited for price to tap into that hour zone. So price has tapped into our zone. So what did we do next? So now we saw something significant happening here. So before price tapped into our zone, we saw that it created a low here, okay. It created a low here. So now this low, some persons might want to buy from here, but that's why you have to be patient when you're trading. So if we mark at the zone, some person might want to buy here. They might be looking at something like this. Might be looking at after this break of structure. After this break of structure, might be looking at buying here to go up, okay. But you saw what price did here. So it created this low. It created this low. After creating this low, there was a bit of retracement, and then it came in. It took out that low before it tapped into our zone. So we have a much more confirmation. So now this particular zone that was created, this particular low that was created, acted as an inducement, okay, acted as an inducement, a liquidity. So it took out this previous low. So price came in, took out this previous low, tap into our zone, okay, tap into our zone. All right, so the next thing now we are going to look at for is our sniper entry, our entry model. All right, so now having seen what price has done here, it gives us more confirmation, okay, because we have seen all the things that we need. We have seen our demand zone, we have seen our break of structure, we have seen our fair value gap, and then we have seen inducements, liquidity, and then we have seen price tapping into our zone. So now we are going to wait for our confirmation entry. So now what next are we going to do? So we are going to go down to a much more lower time frame, okay. We are going to be going down to a lower time frame. All right, now another thing, okay, another thing we are going to be looking at is where we are going to, so if we are looking at entering the markets here, the next thing is our exit point. So this will be our entry point, but let's look at for our entry model. So let's come down to the 15 minutes time frame. So we can spot at our entry in the 15-minute time frame, the 10 minutes time frame, also it could be on the 5-minute time frame, or even 3-minute time frame, as the case may be. All right, so now we have seen this coming down. We have seen that inducement, that previous low that was taken, and then prices tap into our zone. Now price having tapped into our zone. Now for the 15 minutes, all right, it is not very clear, so let's go down to our 10 minutes time frame to look out for something clearer. Now coming down to our 10 minutes time frame, was there anything that was clear enough for us to look at, for to go for? Yes, but I would prefer the 5-minute time frame, okay. So on the 5-minute time frame, we'll see things clearer, but we can also go for the 10 minutes time frame, okay. So let's go for the 5-minute time frame. Coming down to a 5-minute time frame. So now coming down to the 5-minute time frame, so what did we see here? We saw that price, now price in tapping into our zone. Remember our entry model. This is our entry model, okay. Entry model with such that we have a break of structure, and price tap into our zone before it goes. So we're waiting for something like this. Okay, we're looking out for something like this where we have a zone, our point of interest rather. We have a point of interest, we have break of structure, we have a break of structure, and then we have a price tap into our zone that caused the break of structure, and then we buy. Okay, so this is what we're looking out for here. So now we waited for that break of structure. So right here there was no break of structure, and then when we got here, we saw that price created this low, it took out this previous low, and then there was a break of structure. Here is our break of structure. This is our break of structure. Why is it a break of structure? Because we have this previous high was taken out by this new high, and then we have a full body candle close above that previous high. Okay, so this is what validates that break of structure. So there's a break of structure here by this full body candle that took out this previous low. Okay, it created a new high, so we saw that break of structure, and then the next thing is we look at for the zone that caused the break of structure. So this is the zone that caused the break of structure. This is the zone. Now we're not just looking at for a single candle, okay, coming down to this 5 minutes or the 10 minutes. Rather, we are considering all this zone. So we are considering all this zone. So we're putting all this zone, all this area into consideration. Okay, so this is the area that caused the break of structure. So the break of structure, BOS break of structure caused by this zone. Okay, so now where would we put our entry? So this was an entry, long position, and that's where we have that break of structure. We have that zone that caused the break of structure. Okay, so this would be our entry, and then our stop loss above. We actually took this trade. Okay, we got out now. So this was it. So this was the trade we took. So we took this trade. We actually took the trade, and then we entered from here, and this was a take profit. So here on the 5 minute time frame, so this was an entry, and then stop loss. We'll put our stop loss below this zone. So our stop loss below, and then where would have been our exits. Let me take this out. Let's take this out. So our exits, let's go to our 1 hour time frame. So we targeted this previous swing high. Okay, this is targeting this previous swing high. We actually got out of the trade around here. Okay, so this would have been probably take profit 1, and then here take profit 2. Okay, this first swing high and this second swing high. Okay, take profit 1, take profit 2, but we actually targeting price coming into this zone. Okay, some persons might want to hold the trade down to this point, but we exited the trade here. Okay, so this is it. This is that trade. So we took it from here, and then we took it from here and we exited here. Okay, so that's how we were able to spot that our sniper entry on V75. Okay, so you ensure to look at your charts, you go through this over and over again. Okay, get yourself acquainted with this pattern. Okay, and then of course ensure you have a rule-based system So this is a rule-based system in that we are looking out for the markets to show us a particular setup, a particular pattern before we take our trade. Alright guys, so that'll be that for that. So till we'll meet in our next video. Bye for now. So if you have any question, you have anything that is not clear, you can always put it in, type it in the comment section, and then of course we'll be there to always reply. Bye.